You're watching Stockwatch this week with me, Ray White. Joining me to unpack your stock-related questions today via Zoom is Graeme Körner from the Körner Perspective and Talya Ginsberg from Umthombo Wealth. So be sure to send your questions through via email to stockwatch@bdtv.co.za, via SMS on 41392 or on X at Business Day TV using the hashtag Stockwatch. Right, it's been quite a day so far. Graeme, I'm going to start with you. Good to chat to you once again right here on Stockwatch. Question, what is going on the JSE today? It's a bit of a bloodbath. It's as though the miners are getting payback for gaining up over the past few weeks.
Yeah, I suppose gravity has taken over. I think part of it is around the likely nomination for the new Fed governor, Kevin Walsh, which I think the markets view as being a little bit more hawkish than some of the other possible candidates. But yeah, if you have a look, metal prices, you've got gold down 6%, platinum down, I think 14%, obviously depending when you're measuring it from and to. But the precious metals index rate down almost 11% as we speak. Yeah, so it's pretty brutal, down 3.5% on the top 40. But unfortunately, this is the other side of the coin of the 40-50% rally we've seen, largely powered by precious metal stocks. So yeah, but yesterday already you got the feeling that the market was getting a little bit edgy. You saw gold stocks already giving back and maybe even underperforming what the metal had done. So you started to get the feeling that even at 5.5, the market was saying maybe this is a little bit too much too soon. So arguably we were primed for a little bit of disappointment.
Yeah, absolutely. Talya, how's this affecting your world? Because you've got a keen eye on the JSE and you must also be shaking your head today. I called it a Black Friday earlier on, but I think if you're looking at mining stock, it's not a great day.
I think like everything, it's can affect on one hand, it could be good, the other hand, it could be bad. On a day-to-day basis, I also don't want to give too much credence to just what goes on in one day. That is often what they call in. We've seen, I think this year, gold broke 5,000, that 5,000 level, which a lot of people only expected later in the year. And so, as I said, on the day, I think what Graeme was saying, it is very much indicative of what the sentiment on the market is, particularly what's going on with the US, Trump, the Fed, etc. Though, ironically, people tend to buy gold when they're more nervous, if anything.
Yeah.
The others, the platinum, is more actually more fundamentals, more what's going on in industry. So to answer your question fully, I think on one hand, elevated commodity prices, particularly the likes of gold and PGMs, it's great for the country. It means that our balance of trade in South Africa has been positive. We continue to be positive. Also, it's good for our currency, whether it does actually make a difference or even if it's just perception. People perceive South Africa as a gold, sort of a gold currency and a commodity currency, and so it's good at least for perception on that end, and a stronger rand would also be good for things like inflation, so whatsoever. And then just to finish off the answer, is that the commodities, as they've gone up so much, they have crowded out the investment in SA Inc. Okay. And so, which is an area we like. So it could be positive and negative at the same time if commodities go down.
You have to see what happens. Graeme, just on that as well, looking at Kevin Walsh, not knowing who he is, not knowing, we kind of know that he's hawkish. He tried for this position once before, and Donald Trump said no. If he does come in and he does what Donald Trump wants him to do, is to lower interest rates and to really make his mark, what will that do for markets?
Well, low interest rates are generally good for markets, but the question, of course, is whether that administered interest rate will translate into, for example, 10 and 20-year bond yields also coming off. But I think, Ray, the issue is now, historically, Wash seemed to have been a little bit more hawkish, as I said, than some of the other names that have been touted. So I think that's really the issue now, that the market is worried that maybe he will follow the dual mandate rather than just saying, you know what, let's cut rates as aggressively as we can to try and stimulate the economy. And I think in a weird world, if you think about it, a lot of investors, myself included, have been quite worried about what could become sort of almost a lotto on monetary policy. If so, well, to hell with inflation, we're just going to chase jobs as an example. And truthfully, the US labor market remains very robust. So I think the short answer to the question is low interest rates should be good, but I think the market right now is questioning whether this nomination isn't maybe a slightly more middle of the road kind of approach than what some of the other, let's say, more dovish possible nominees, as I say, and maybe somebody who will actually follow the mandate, the dual mandate around inflation and jobs.
Yeah. Graeme, I want to ask a similar question as I asked earlier on with Mohammed. Do you sell now? Do you get rid of your gold stocks now? Do you need to panic? Do you need to think that there's changes coming, or do you just hold the line?
Sorry, Ray, you were asking me?
Yes, please. Yes.
Yeah. Look, I mean, in large part, we haven't benefited from the gold rally. Generally, I don't see gold as being investment grade. It's been a phenomenal run. And I think one of the things I say to people is, when gold goes from 2,000 to 3,000, the effect that has on gold mine profitability is very different from the move from 4 to 5 or 5 to 5.5. Right. It's almost a diminishing benefit. So I think it's been a phenomenal performance. If you are a gold bug, and you've been playing the equity market as a way of just trying to generate some performance, I would lock some in. You've just seen today quite a few of the gold shares, the platinum shares, down 10%. We don't know where this thing is going to settle, but I think there's just been the perfect storm for gold. So if you've seen the kind of gains that we saw out of the precious metal sector over the last year, I would probably bank some gains. If you're a gold bull, you might leave a little bit of money on the table, but definitely taking a profit here wouldn't be harmful.
Yeah, no, good idea. All right, Talya, I'm going to climb into it now. Quite a few WhatsApps and SMSs have come in. Looking at Discovery DSY, so something that we need to look at. Discovery being DSY, what are your thoughts?
Discovery, it's sort of quite a multifaceted one.
Okay.
I can see why people would like Discovery. I think, there's this seen as mavericks in a lot of senses. They pushed the envelope, the bank, I believe it was last year, they broke even before they thought they would. And then you have a very charismatic CEO and very good marketing. And it's probably one of those few insurance companies in South Africa, not the world, that sort of has this sexy / growth image. There are certain things that we would like to see more conservatism on certain aspects within Discovery. But as I say, it's always been interesting. I think it will always capture investors' imagination.
Yeah, interesting stuff. It certainly is. All right, here's one stock picker. Why is the price of Richemont weakening each day? Lost about 15% since this latest round about 2 weeks ago. Graeme, Richemont, it's a very interesting stock. What are you seeing?
Yeah, so I think, Ray, you've seen some of the luxury goods companies disappoint. In the case of Richemont, I don't think they disappointed. Always, quite a complicated business. Things like precious metal prices, obviously quite an important input cost for them. But my sense is that it's probably more a function of anxiety towards towards the luxury goods sector generally than anything around Richemont specifically. And but the problem with these things, and I've said this often, if you think about the business model of Richemont and how immune many of their customers are, I'm talking about in the luxury watches and in the jewelry maisons, the underlying results tend to be quite volatile. So I think that might also be nagging a little bit, but also just maybe the rating. But I think it's more just a sentiment issue towards luxury goods generally, as you've seen out of LVMH, for example.
Yeah, that one from Clive Willoughby. Thank you, Clyde, for that email that you've sent through. Right, I'm going to throw Jubilee to you, Talya. Jubilee, very interesting stock, but questions about Jubilee. What are your thoughts?
In terms of being an interesting stock, I agree with you 100%. So Jubilee, I believe they used to be more in the PGM space. They've now moved, they've now moved more to copper. So our house view on copper is very constructive. The supply-demand dynamics are very constructive for copper. There's not a lot of copper reserves above the ground. You need it to industrialize. And then at our firm, we're very bullish on this electrification thing, saying that the world, given all these AI and clouds and all that, they'll need data centers, and you need a lot of electrification for that. And so in the long run, copper will definitely benefit with that. And so if you do like the copper theme, I would say Jubilee is a nice way to play it. But I will just give some caveats, is that there could be some potential political risk, as they do also operate in Zambia, and there's going to be an election in Zambia later on this year. And second of all, I'd say it's a bit more of a long, if you want more surety, perhaps look more into the long term. I can never tell exactly what's going to happen in the short term, but we believe possibly that the results will be depressed in the short term.
Yeah, it's interesting. Also, copper prices as well. I mean, looking at their stock price now, down 7%. It just shows what a Friday we're having at the moment. But also, copper prices have been quite volatile, up and down. I want to keep you there. I mean, Talya, Tiger Brands as well has also been on our radar. An email coming from Ntabi Singh talking about Tiger Brands, good or bad buy, and that's directed at you, actually.
At me. So Tiger Brands is one I've been covering for a long time, and it's been, when I first started covering it, they had that older CEO, and Tiger Brands is nowhere near reaching its full potential. And the new CEO, he's done, Tjat, if I'm pronouncing his name correctly, he's done an excellent job. And honestly, this last set of results, which came out in December, they gave a special dividend. It was something not even I could have predicted. And so if you do have it, I say keep it. And I'd say Tiger Brands, optically, I think it's a good share. I think the management team is fantastic, or the new management team, but I will say it's not optically cheap. And so I think if you are going to buy into it now, the investments, you never know how that's going to go. But if you're looking for a cheap entry point, I don't believe today would be it.
Graeme, a message for you. What are your thoughts on ASP now that it's listed on the NASDAQ and JSE and the unique products it produces? Does the counter have good prospects? Talking ASP, what are you seeing, Graeme?
I think it's ASP Isotopes. Yeah, it's interesting. I mean, Renegen, if I'm understanding the question correctly, effectively you found ASP taking Renegen over. I think Renegen was a company that really commanded a lot of excitement, but I had the view, which I think was probably correct, that they maybe didn't have the balance sheet, and being listed in SA wasn't going to be the right market to try and tap into the funding that they would need to bring everything to fruition. ASP Isotopes is an interesting business. I think the medical carbon dating, all those fields are constructive, and I think the Renegen assets are quite exciting. It's not a widows and orphan stock, but I think it's for those with risk appetite, it's definitely worthwhile. Having said that, the sort of nuclear space definitely, as Talya was saying earlier, the world is short of power generation, and I think we need to, if you want to fast track, you pretty much have to go that, and also more and more people are of the view that if you're not going to do wind and solar and so forth, then nuclear might be a viable alternative. So yeah, I think ASP in The US is volatile. I think the whole sector commands a lot of sort of punter, retail investor kind of interest, and that's why I think you've seen quite a lot of volatility. But if you can tolerate the risk, I think it's quite an interesting plan.
Yeah, interesting stuff. All right, another question from Jim. I'm going to throw this to you, Talya, because you've done Advtech before. Jim asking about Advtech. Looks like a good stock. You've been following it. I know you have been. What's your take on Advtech?
Yes, as you've alluded to, I made Advtech one of my stock picks one of the times I was talking with you. And so, I don't know if Graeme has a different perspective to me, but I just love the stock. And I've liked the education sector. You've seen right now Stadio is trading at very high multiples because rightfully so, they're seeing growth and elements like that. I believe Advtech also has very good growth. They also have a growth avenue through Africa, which I believe has a very good population dividend. If you play that properly, young, economically growing, there can be a need for education there, particularly within the likes of East Africa. And then I like stocks that have quality and so say good ROEs and good cash flow generation, which I see from Advtech. And so I continue to like them, and I haven't changed my mind on that yet.
Still your stock pick, if I had to ask you today, but we'll ask you later on what your new stock pick is. All right, staying with you as well, I mean, looking at some of the other things, education and hospital stocks. Tell you, what's your take on that? What are the winners and the losers? Because there's a few questions that have been coming through, so I thought I'd group them all together. What are you seeing?
Sure, it's education and hospital, and now basically we can look at two stocks each. Kuro is gone, so it's Advtech and Stadio, which I believe I just shared my views. Hospitals, I've actually found a bit, in my experience, I found a bit harder than the education stocks. The hospitals, you have to look at them a bit differently as almost a bit of a bond proxy. They're going to be quite steady. They're going to grow by a few percent every year. Maybe they can get more patient days in, that kind of thing. It's not going to be hectic growth, like they're going to build another 1,000 hospitals. And we've seen the past, I don't know how many, 10, 15 years, both Netcare and Life have gone overseas. They've tried these aggressive growth strategies, and both they've gone back to their South African roots.
Okay.
And so, I think decent investments, particularly if you're more of a safe kind of bond proxy investment.
Yeah. All right. Thanks for that. Woolworths, Graeme. I mean, yesterday I kind of felt sorry for them a little bit because their growth outlook looked okay, but their stock price losing 6%. A question here, what happened with that? What's the prospects with Woolies as well? They've had that whole Australian adventure that didn't work out so well. What are you saying?
Well, the Australian adventure arguably, continues to haunt. So I think the SA businesses, Ray, I think you're right, looked okay, considering the really tough operating environment that the retailers are facing. And you've seen some pretty lousy updates out of South African retailers. I think the food business was up 7%. Personal care maybe a little bit less than that, and clothing not spectacular. It's kind of been their Achilles heel for a while. But then once again, I think currency translation's hurting a little bit, and Country Road continues to battle. It's a very, very competitive market. So I think you can feel sorry for the current management because they continue to, pay the price for the sins of their fathers, so to speak. But I think the reality for me, though, is I think it's on about a 16 multiple. And if you look at it, the earnings now are pretty much where they were a decade ago, or will be, in the year forward. So I think that tells you the story that arguably there are better retail stories out there. If you're looking at food, I would argue ShopRite just stands head and shoulders, and they're about 10% off over the last while. So, I think the market just not comfortable with the level of traction.
Yeah, it's interesting. I mean, looking at Mr. Price as well, they've had some interesting numbers lately, Mr. Price, but it seems to be a different WhatsApp group to Woolies.
Sorry, you were still with me? Yeah, I think Mr. Price, a really credible management team over many, many years, but they seem absolutely determined in spite of quite a lot of vocal shareholder resistance to this European transaction. So they're adamant they're going to push ahead, and you're seeing quite a few shareholders bailing. And I think a lot of people are sort of saying, listen, we just don't like it because, we're talking about Woolworths, but they're not the only one. There are lots and lots of South African retailers who've gone all over the world and lost their shirts. So I think for me, Mr. Price is, I wouldn't say uninvestable, but I think the jury is going to be out until they've got this transaction down. And if it works, great for them. If not, sadly, it'll become another South African retailer who made a mistake with an expansion offshore.
Gosh, Talya, I'm going to bring you into the conversation on that. South African retailers like the Truworths Group and things like that. What are you seeing? Because I know you've got a keen eye for that.
South African, I think as I alluded to at the beginning of the show, we do very much like the theme of SA Inc. But you do have to take it on a case-by-case basis because all of these shares have their own, they're not all homogeneous, they all have their own nuances. And so generally, Truworths, in the past, it was one of our top picks, and there are things we still like about it, the cash generation ROEs, but we have seen a sort of decline in margins, particularly what they've done very well with in the past couple of years was Office. It was their UK retail branch. And part of the reason they did well also was because they closed unprofitable stores, whereas now we're seeing they're going to ramp up their store openings in the UK.
Yeah.
And so that's just particularly on Truworths. And sure, it's become a very complicated space. I mean, Mr. Price, which was before just a nice bellwether for South African retail, has now sort of become this NKD play. So as I said, we like SA Inc., but for the closed retailers, we have to take it on a case-by-case basis.
Yeah. I want to get into your stock picks shortly, but one for you, Graeme, before we get there, Glencore. There's been one or two emails come in about Glencore. They got this big deal coming up. What are you thinking about them? They were down, then they were up. Where do you see them at the moment?
So, Ray, I think with the excitement we've seen in the commodity space, you're going to probably see a flurry of M&A activity. So, yeah, bottom line is if you're in Glencore, I think I would just sit tight there. From what I see and know, my sense is that Rio's and Glencore have been, it's almost like an annual chat and just couldn't for whatever reason get it through. I think often around who was going to lead the business. So if you hold them, I think it still looks very, very well placed. Yeah, I think, in a way, companies like BHP Billiton and Anglo American, obviously Anglo's has had a really good run because copper is really important in their life. BHP in large part has sort of been forgotten. So if you're looking to put new cash in and you want to sort of play this whole, rampant commodity market, I would rather look elsewhere. And also, Ray, my view is always don't back the corporate action. Sometimes it doesn't work.
Sure. Right, Talya, what's your stock pick today?
My stock pick today is Signia, so also an asset manager like ourselves. And generally when I pick stock picks, I also like to think of something that would be good for the retail investors sitting at home. And so something like Signia, it's had very good growth over the past couple of years. As I say, I like dividends. They give a good dividend payout ratio, therefore good dividend yields, and as I alluded to with Advtech, also good, excellent cash generation.
Right. Oh.
So I like it for that. And then just give me a few more seconds. And then I also like the idea that we saw this very big AUM growth in their last set of results, which I believe hasn't gone through the bottom line. So we believe that will also play out.
Perfect. Signia it is. Right, Graeme, the microphone and the camera's on you. What's your stock?
Similar vein. I'm going to go with the LSE group, so London Stock Exchange Group, which is obviously listed in the UK. So we tend to think of it as just a market, being the LSE, but obviously not just the LSE. There are other markets as well. But also they play in other spaces. In fact, data and analytics is a very, very big part of it. They've got risk management tools. I think there's been quite a lot of weakness. My sense is it's because the market is worried about AI, but the reality is that data sits behind paid subscriptions, and the AI models are not going to be able to sort of assimilate and scrape that data. So I think 17 PE, give or take, for probably 11-12% earnings growth, dividend yield of 2%. Well placed also in FTSE Russell in terms of providing, we believe, cost-effective alternative to some of their competitors. So yeah, I think LSE Group, after the recent weakness, to me looks quite compelling.
So you're not worried about the AI bubble bursting and affecting the overall picture?
No, well, it may, but I mean, you've already seen, for example, the OpenAI backers, let's call it Microsoft, taking an absolute smack yesterday, 10% down. So no, I think there's a risk, but I think, like Talya, my sense is that what's happening in AI has obviously powered the world markets, but behind that, you had a lot of companies like this that have actually just been rusting away, and SA, let's call them traditional companies, have also been offering value for some time. So I'm not worried about open AI bubble bursting, or the AI bubble bursting and taking the whole world with it.
Sounds good. We'll have to leave it there. Thank you so much to both of you. Thanks to our guest, Graeme Körner from the Körner Perspective, and also to Talya Ginsberg from Umthombo Wealth. So do remember that Stockwatch pre-records on a Monday and a Wednesday at 1 p.m. and is live at 6:30 p.m. on a Tuesday and Thursday, while Stockwatch this week is live at 12:30 p.m. on Fridays, as you can see. Keep that in mind and keep your questions coming. For now, that's all from the Stockwatch team this week, but do stay tuned for lots more coming up right here on Business Day TV.